Hi, so finally, CBK has released the prospectus for June auction, June 2025 Treasury bond auction. If you watched my previous video, I had told you that during the financial year planning, during when Treasury was planning for its borrowing in the year for the financial year ending June 2024, the plan initially was to carry out the auction, the June auction on 4th June. And Treasury or CBK was meant to have received our money. We were meant to have settled on 9th June. At the point when I was doing that video, CBK hadn't released the prospectus. And what had happened in the previous auction for the Treasury bills, the interest rates for the 1-year Treasury bill finally hit the single digits. All right? And there was an oversubscription for the Treasury bill, specifically for the 1 year. And now, why am I so curious on the 1-year Treasury bill? Under normal circumstances, when investors are not foreseeing interest rate increase or interest rate hikes, they try to lock in interest, the prevailing high interest for the longest time possible. Okay? So the Treasury bill auction for last week is a good indicator to what we're expecting to see in the coming months. The results for the Treasury bills auction for last week was a good stepping stone to this month's bond prospectus. Why am I saying that? 2 weeks back, CBK put forth a borrowing request to the public, now the Treasury bills. They wanted to raise 4 billion on the 90 days T-bill, 10 billion on the 180 days T-bill, and on the 1-year T-bill, they wanted to raise rather 10B. Cumulatively, for that auction, last week's auction, they wanted to raise a total of 24 billion. Now, CBK wanted 24 billion. How much did investors propose to invest? A cumulative sum of 61.4 billion. The government wants 24B. Investors are offering 61.4 billion. These are short-term papers, Treasury bills, yeah? Now, on the 1-year bill, T-bill, that is where there was the oversubscription. Investors put forward bids worth 43 billion. That is 400% of what CBK wanted. And then ultimately, CBK accepted 57 billion of those bids. All right? So when we see an oversubscription of the 1-year T-bill, it's an indicator that in the next coming months, we don't foresee interest rates increasing again. As a matter of fact, during the MPC, the Monetary Policy Committee meeting of yesterday, the MPC reduced the CBR rate, the central bank rate, which is the rate at which CBK is willing to lend to banks, yeah? Reduced the CBR rate by 25 basis points. That is by 0.25%. Okay? To bring it down to 9.75%. The lowest CBR rate we've had since about 2023. Okay? How does that mirror or how does that correlate to the bonds which have been reopened this month in June or which are being auctioned in June this month, yeah? CBK reopened 2 papers. We have FXD1 2020-15 and SDB1 2011-030. In this video, specifically, we are going to be reviewing the salient features of FXD1 2020-15, and at the end of the video, you should be able to know whether this investment opportunity is viable for you or it's one that you like to jump in a little and wait as you speculate on the IFB, or you like to skip it altogether. My name is Belin. Welcome back to Wealthwise, your home of financial freedom. If you haven't subscribed, please do honor me with your subscription and let us continue. FXD1 2020-15 is a paper that was first auctioned in the year 2020, and it was a 15-year paper, meaning that it has 9.7 years to maturity. It will be maturing in February 2025, meaning if you give CBK your money now, for the next couple of years, up to 2035, you will be earning coupons on that paper. The coupon rate on this paper is 12.756. It is the rate it was first floated at in the year 2020, right? So anyone who has been having this paper from the year 2020 has been earning a coupon rate of 12.756% on this paper. Its net coupon is 11.4804. Now, let me paraphrase that. Now, during the year 2023, when interest rates skyrocketed to 16, 17, we even have an IFB of 18%, investors who had invested in this paper back in the year 2020 have been earning interest or coupons at a net coupon rate of 11.4804%. Even during the time when there was an IFB at 18%. Is that coming out clear? So this happens to be one of the disadvantages of investing in treasury bonds because the income is fixed. The return on investment is fixed. If you took this paper in 2020 and rates increased in 2023 to 18%, when the investors who are earning interest, who are investing in 2023 and earning coupons at 18%, at 16%, or even at 14%, you continue to earn your net coupons at 11.48%. The coupons on this paper will be paid in August and February, but that aside, do you think this investment opportunity is viable for you, considering the prevailing market rates? Remember, I've told you that MPC have reduced the CBR rate by 0.25% to the lowest since 2023. The Treasury bill, the 91-day T-bill rate, has eventually hit a single digits. In other words, it's below 10%. Now, with that said, we expect the money market fund interest to reduce further. We already had MMFs that were paying us 5%. Some are paying 7%. Some are paying, we still have some paying 8%. Others like Etica are still paying 12 or 13% thereabout. We expect these money market funds interest rates to come down further. So do you think that this 11.48% is a viable return on investment that you'd like to lock in for the 9.7 years remaining tenor of this paper? That is for you to tell me. Do you think it's a viable paper? Anyway, that aside, in the secondary market, remember this thing was first auctioned in 2020. In the secondary markets, as of the previous working days, secondary market transactions, this paper was being auctioned at a discount. The NSE market, the average trading price was 97.5567 shillings for every 100 shillings. So that means that I expect it to be auctioned at a discount. However, it has an accrued interest element of 4.4155 shillings. In other words, if assuming the discount, if you are to put up a bid for 100 shillings, you'll be expected to pay accrued interest of 4.4155 shillings. If you're putting in a bid for 100,000 shillings, you're expected to pay accrued interest of 4,415 shillings. Okay, that is excluding the discount. But I expect it to be sold at a discount because it's already trading at a discount in the secondary market anyways, yeah? But CBK will be advising us on the actual amount to remit to CBK. Nobody can predict that now. Otherwise, CBK would have been putting for us in the prospectus, whether we are going to buy it at a discount or at a premium. The actual price will be communicated to us by CBK on the bid closure date, which is on 18th June, right? Now, another important date to note is the settlement date. If you put up your bid for this paper and your bid is successful, which is likely to be, settlement will be on the 23rd of June. So with the net coupon rate being 11.48%, the maturity rate of 9.7%, and the coupon payment months of August and February, do you think that this investment opportunity is viable for you. Now, how do you know if it's viable for you? You check on your objectives, specific objectives. People have different objectives. My objective will be different from your objectives. If your objective is to earn passive income, then yes, you can take up this paper, a portion of it. If you have an objective of capital preservation, yes, this paper offers you capital preservation. However, if you have an objective of wealth growth, of growing your wealth, you want to fast track and grow your wealth, then this, unless you don't have a safety net already, I mean, unless your safety bucket is still quite low or is quite empty, then you might want to put a portion of your investment in this paper and another portion in other investment opportunities. Now, like the shares, like Mansa X, that offers you higher return on investment. However, if you're looking for security, if you're looking for capital preservation, then yes, certainly, this is a paper that is worth taking. All right? Awesome. Something else that is important for us to pick from this auction is the reinvestment risk that we see in treasury bonds. Reinvestment risk is the risk that when you are reinvesting, you are likely to make a loss, or you're likely to reinvest at a lower rate return, right? Do let me know in the comment section, do you think that this is a paper worth investing in? Is it an opportunity you'd like to take up, or you'd rather go for the higher return investments temporarily, or would you be comfortable locking in your funds or your investment rather and earning 11.8% for the next couple of years? Or do you think you will want to try trading one of the high coupon papers for this low coupon paper so that you can increase your principal investment, which ultimately would mean that you'll be in a position to earn more coupons? What do you perceive of this treasury bond, of this paper which has been floated? Do you feel that this is an investment opportunity that is worth taking, or you'd like to speculate a bit, hold on to your money a bit, maybe in the money market funds, as you speculate the next IFB, which, by the way, nobody knows when it's going to be floated, and nobody knows at what rate it's going to be floated at. But what I can tell you for a fact is that CBK is still hell-bent on dragging down or bringing down the interest rate further. Why? So that the economy can grow further and can thrive. In the previous video, I told you that there's excess liquidity in the market. At the end of the day, the banks have extra monies in the account after settling, after paying whoever is withdrawing money, after settling, and after meeting the minimum requirements set by CBK, they have excess, which CBK has been mopping or have been taking from the banks. So when CBK lowers the interest rate further, when CBK reduces the MPC rate further, ideally what the government is trying to do is trying to ease the economy so that trading can become easier, so that people can have easier access to money, can become more liquid, and can be able to trade, conduct more business, can be able to have more turnovers for the benefit of the taxman. You see how these things are interrelated? Anyways, I think I'm going much into economics. My name is Berlin. Let's meet on the next video. But please don't forget to leave me a comment in the comment section. Don't forget to share this video, and let's meet on the next video.